What's up, bro? This is Leo with YMTracker. So in this video, I want to tell you that I am going to be piling into Misti heavier, and I was hesitating about this move, but in this video, I'll explain why I'm gonna do that, and also my other moves that I plan. So while everybody is going into Alti and everybody is hyping it up, and I do like Alti, but I prefer Misti, to be honest, and I'll explain to you why. So if you don't know, I built this tool, YMTracker, to help me kind of navigate yieldmax funds to see how they're doing, look at their performance, their trades, their holdings, and project their dividends, as well as help me understand where these funds are going, because they're paying a lot of money, very high yield. However, at the same time, they're very susceptible to price drops, especially if the underlying is not performing well. And so to have a clear picture, I built this tool. So we're running a 4th of July 25% sale on this tool. It ends in 3 days. So if you want to try it, there is a 7-day free trial. And if you click a link in the description for this video, it will apply the 25% discount code automatically. With that said, bro, I ask you to smash the like button, subscribe to the channel. It really helps. And also, this video is not financial advice. I just use this YMTracker to make my own investment decisions. All right, bro. So why am I going to be adding to my Misti position? Here is kind of a, sky view of what I do. Typically, I buy long-dated leaps on different stocks because it is more capital efficient, but also to have kind of a cash flow, I sell covered calls and I sell puts. So that's what I like doing. But right now the market is kind of at the top. SPY made all-time high this Thursday, and so I don't feel it's a good time to sell puts on stocks, because if we have a downturn, even a small one, a lot of stocks that have high beta, they drop a lot when the market goes down, and so then you run a risk of assignment. And I feel like most of the stocks that I like to sell puts on, they're kind of overpriced right now. And so at the same time, I still want to make like ongoing income, and I'm looking at Misti. And if we look over here, the price has been rather stable. In fact, it's kind of on a down low. Of course, it's not as cheap as it was in the beginning of April, during the liquidation sale, the Trump's Liberation Day. But even with that, it's still kind of decent price. On top of that, bro, look at the Bitcoin. So Misti runs covered call strategy on MicroStrategy. And then MicroStrategy is a treasury of Bitcoin. And so right now, so MicroStrategy is kind of tied to performance of Bitcoin. And if we look at Bitcoin, it likes to stagnate in the summer. If we look at the history, like over here, it's kind of flat during the summer, and then it had a bull run. Okay, so that was 2021. After that, we had, FTX, all that good stuff, high interest rates, inflation, everything went down. And so over here, it was kind of flattish, and then FTX hit, everything went down. But since then, it was always stagnating in the summer and then having this explosive moves toward the end of the year. Okay, over here, it's stagnating, like it goes up and down, but then it moves up. Okay, so this is current year. We're near the peak, of course, but I think we have one more good push in the current Bitcoin rally. And at the same time, I think now that there is a lot of institutional money going into crypto, into Bitcoin, especially with the IBIT ETF from BlackRock. These big institutions, they're not gonna let Bitcoin collapse. Okay, maybe it will go down, we might have a winter, but consider if we push up to 200,000 on the Bitcoin, and then during the winter it drops to, say, it drops 50% back to 100, we'll be at the same level we are right now. So I think we are basically stagnating for the summer. People are on vacation, this and that, and we are, at least I think, we will have another big push up on the Bitcoin, and that will most likely take MicroStrategy with it, and as a result, Misti will follow. Okay, bro, again, this is just my thoughts, not a financial advice. At the same time, bro, look at their current position. So we're sitting on 345 million of unrealized gains. So if we were to cash out our synthetics, we will make $1.39 per share. Right now, we also so far have 23 cents in just 4 trading days. We made 23 cents per share. And this is already a realized income that went into the cash pile. And so for the next week, where are we sitting? Okay, so the next week, it's meh, so-so. But we have a lot of calls for 440, 430, 425, 422. So we're sitting okay. There is also a big position over here at 400, and that's already in the money. The 402 is also in the money. So these positions over here, they're kind of at risk. But let's hope that MicroStrategy will stay range bound. Then we'll win all of this calls over here on the bottom, and should do well on these ones. But even if we lose a couple of bucks, on this one, we'll roll it out for a higher strike for next year, for next week. And then look at the synthetics. We have expiring in September, and then in August, another one in September, and only 2 positions in July, which will roll. They will probably either they take, you know, a credit and move it up by a couple of bucks, by 20 bucks, like they did over here for 390s, or if they stay in the 370 range, then it will cost us a little bit, but I think in the end it will be profitable. So I don't know what they will do, but I think they'll do fine. All right. And yeah, like I said, I think Misti, the MicroStrategy, it has been kind of coiling up, ready for explosive move, and that move could be up or down. Now we still have the risk that Trump will say, okay, the 135% import tax on China is back on the table because we couldn't reach the deal, just like he did with Canada. But when he did that with Canada, he's like, okay, all the tariffs are back on Canada. One day later, Canadian Prime Minister, he just surrenders, you know, comes to Trump like, yes, sir, we'll do what you ask. And so I don't know. China is kind of a stronger country. They will likely not do that, but I think this whole tariff narrative will kind of go away. Yes, July 9th is when the extension is supposed to expire, and that could have potential market volatility. But I think right now market is not so scared about it as it was in April. Okay, bro. And so with that, I will be adding to my Misti position. I don't know how heavy yet. I haven't decided that yet. I also want to add to Simia. I've never had Simia. I was hesitant because of the super micro, you know, their history with cooking the books and stuff like that. But I think SMCY kind of had its downfall already, and we can see it over here. So I did the comparison. Let's look at this SMCY. So like this is a price chart right here. We can hide everything. Let's take a look at Simia. Okay, no, let's hide these two guys also. So they had their heyday already, and they're kind of not stagnating but also coiling up. I think SMCI will do fine right now. They already kind of like figured out the accounting part. Hopefully it's not another scam, but you know, they were $130 stock, $120 stock. Now it's 45, 48. So even if there is a drop, I don't think it's going to be very deep like we had over here. Simsi was $16. Yeah, I think I should have just picked up a few Simsi shares over here in the middle on June 23rd, but whatever. So I'm thinking about Simsi. I think it's also great fund, and look at this. Look at how many people bought into Simsi just before the dividend. Yeah, so I will add some Simsi, but mostly I'm excited about Misti, and I will be adding a significant chunk to my Misti position because, again, I don't feel comfortable selling cash secure puts right now because of the potential drop due to tariffs, and then I will be stuck with very expensive, you know, stocks that I may or may not want, especially at the, you know, near market peaks. All right, bro. With that said, next video I'll make my YMAX video because I also like YMAX, and I've added some things to the tracker specific to YMAX and YMAG. And when you look at the holdings of YMAX and YMAG over here, I added the IV of the underlying stocks for each of the funds they hold, and you can basically select the stocks that you want to trade, sort of based on their IV. It was a novel idea from one of the viewers on the channel, one of the comments, and I kind of like that idea, but I'm not gonna, you know, jump blindly into that. You, like, for example, AIYY has 51% IV, but the stock costs like $2.50 or something insane like that, and it's been a money way, yeah, 427, but they've been losing money like crazy. So high IV doesn't always mean profitable. You always have to look at the underlying. For example, AMZ has been really stable, and it did decrease a little bit, but it is a very nice fund. And you know that Amazon, the underlying stock, it's going to do well, even though it kind of suffered during the Trump liberation sale. This is an amazing company with amazing returns, and you can see they have great revenues. So like you can see this goes down, but technically you have to compare it with the year before, and that's here, and we're growing 8.5% year over year. Here it's growing at 10.5%. Okay, and overall, look at that. It keeps on growing. The AI portion of Amazon is not just selling cheap stuff, you know, on Amazon.com. It's the cloud, it's the AWS, and a lot of other small businesses that they are part of. And also, they've been concentrating on the free cash flow so far, and I think this company just has amazing future. And so, buying into something like AMZ, while its IV is not very good, like, look, where's AMZ? 35% IV. So that means the Amazon stock is not very volatile. and doesn't pay so much on the option on the covered calls, I still think it's a much more stable stock than AIYY that has high IV. At the same time, also when I do my full review of YMAX, like bro, this is a very interesting statistics over here. The ownership column, like YMAX owns 85% of ABNY, the whole fund. So all the other investors, they only hold like 15.5%. They own 78.5% of DISO. This is, you know, this statistics, like you can look at it a different way, but it's a little bit scary. That means like nobody likes these funds if if um if yieldmax owns most of it. Like of course, you know, investors invest in YMAX, and through YMAX they own these funds, but I would just like get rid of them altogether, both ABNY, maybe not ABNY, I don't know, I'm not sure how well it does, but you can see the prices started trading at 20 bucks and now it's 11.74, so something is off on that thing. And where the DISO, yeah, whatever. So that's a whole different conversation. I'll be making video comparing YMAX to YMAG and just my general view on YMAX. I kind of like it. I do have a sizable position in it, and I think I will be adding to it as well. And finally, I want to kind of show you here these numbers. So I ran some calculations. Let's check all of them. We can hide SPY, or we can leave it. So basically, yeah, let's leave SPY, hide Misti and Simsi, and you can see SPY, OLTI, YMAX, and YMAG kind of performed in about similar fashion, about the same returns. And then if we hide YMAG, these guys, they're all very close. The SPY, the OLTI, and the YMAX. And then if we, no, let's hide everything. Let's hide SPY and only do YMAX and YMAG. So this is since the beginning of the year. YMAX has widely outperformed YMAX. And the reason for that is YMAG holds aptly GUI and MSFO, and those things just don't pay very well. And the GUI stock has been suffering tremendously because people are just worried about Google. There's constant like antitrust issues. People think that search is dead, this and that. And so GUI stock that's trading covered calls on Google, it's not been doing well. Anyway, so that's for a different conversation. I just wanted to show you how these funds did since the beginning of the year. Let's hide YMAG here. You can see Misti. Now let's bring Simsi here. So we have 4 stocks. OLTI and YMAX did just about the same. Basically no difference between the two. 8.5% and 8.05% total return in the 6 months. That's not bad, and it's better than SPY. But Simsi and OLTI, they just did a lot better. And by the way, both of these companies, they just announced dividends, so the price drop you can see over here. Let's hide YMAX and OLTI. So we only have these 2 guys here. I'll zoom in. So there isn't really no price drop because, well, the price went down. The dividend they're paying is not calculated in the total return yet because it hasn't been paid yet. Therefore, on Monday, this number will spike back up because it will now include the dividend payment. And so, yeah, those 2 funds, they performed rather similarly since the beginning of the year. You can see there's ups and downs in both of them, but I like both of them, and so I'll be adding to my position, especially that the market is up and I don't feel comfortable selling cash secure puts. All right, bro, thank you for watching. Again, this is Leo. I'm using our yieldmax tracker tool to run different comparisons and look at the trades and the holdings on all the yieldmax funds. If you want to try it, again, we are running a promotion, 25% off lifetime discount that expires in 3 days, bro. So if you want to get it, you got to lock it in now. That deal is going away. And once again, smash the like button, subscribe to the channel, and I'll be making my YMAX video very soon and explain to you why I like that. Peace, bro.